Imagine a world where asset prices are at an all-time high and interest rates are at the lowest in human history. A world where the biggest players are looking for a back door. Welcome to the Great Reset. In the world of finance, we're seeing an extraordinary phenomenon. Gold and silver are being accumulated off the exchanges at an unprecedented rate. This isn't a random occurrence, it's a calculated move by those who understand the direction in which the financial wind is blowing. As asset prices continue to soar to dizzying heights, the world's power players are incentivized to seek an alternative, a financial backdoor, if you will. We've seen this play out in Russia, where despite sanctions, the nation continues to trade with 85% of the world. But it's not just Russia. We're seeing a global coalescing of nations, all seeking to stand up against the financial dominance of the United States. The Belt Road Initiative, involving 147 countries and the BRICS nations, which collectively represent 90% of the world's population, are all part of this growing coalition. The idea here is simple. As individual nations, they might not be able to stand against the US, but together they have the potential to shift the balance of power. In this context, the role of gold and silver becomes all the more significant. Remember, gold is classified as a Tier 1 asset, on par with US dollars. It's not just individual investors who are buying gold and silver. Central banks, commercial banks, sovereign wealth funds and family offices are all accumulating these precious metals, moving away from counterparty risks. The drawdown from all major exchanges is clear evidence of this shift. But why is this happening? What does it mean for the future of our financial system? This is the backdrop against which we must understand the importance of gold and silver. But why should we care about gold and silver? Let's delve into that. Gold and silver have been coveted for centuries, not just for their beauty, but for their enduring value as a medium of exchange. They've weathered countless economic storms and have come out shining time and again. But their importance in today's world goes beyond their glittering appeal. In the financial world, gold and silver enjoy a status as Tier 1 assets. This means they're classified as the highest quality and the most liquid assets. They are seen as the ultimate form of payment because they don't carry any default risk. But who's buying these precious metals? It's not just your average Joe looking to add some sparkle to his investment portfolio. The biggest money in the world, the central banks, the commercial banks, the sovereign wealth funds and the family offices are all buying gold and silver. They're not just buying, they're taking these precious metals off the exchanges. This means they're not just holding paper contracts that promise gold and silver, they're taking physical possession of these metals. They're moving against counterparty risks. The risk that the other party involved in a financial contract will fail to meet their obligations. So why are these financial heavyweights hoarding gold and silver? Because they know that in times of economic uncertainty, these metals hold their value. They serve as a hedge against inflation and currency fluctuations. They offer a sense of security in a world of volatile markets and unpredictable economic events. And that, my friends, is why you should care about gold and silver. They're not just shiny trinkets, they're valuable assets, sought after by the world's biggest financial players. They're a safety net in a world of economic uncertainty. They're a timeless store of value in a world where the value of paper money can rise and fall with alarming speed. Saudi Arabia, a key player in the world economy, joins the BRICS nations and opens up energy purchases in other currencies. Suddenly they announce, hey, US, thanks for the ride, but we're now being protected by China and Russia. We're going to start accepting other currencies for our energy resources. This single decision could send shockwaves through the global economy. You see, every country that's had to own dollars since 1974 might start to question the necessity. And when that questioning turns into action, we could see a wave of countries dumping the dollar. A mass exodus from the dollar could lead to its value collapsing. And when the value of the dollar collapses, it hits the US shores like a tsunami, bringing with it hyperinflation. But that's not all. Hyperinflation triggers another beast: interest rate spikes. To compensate for the loss of purchasing power, interest rates would need to rise. And when interest rates spike, the four pillars of wealth in the US, stocks, bonds, dollars and real estate, could simultaneously collapse. Now let's circle back to why we're talking about this. Remember gold and silver? These precious metals could serve as a safe haven in this kind of economic turmoil. When currencies falter and economies shake, gold and silver have historically held their ground, offering stability and security. This isn't a doomsday prophecy. It's a hypothetical scenario, but one that's not entirely impossible given the current global economic climate. The point here is to highlight the potential vulnerabilities of relying too heavily on one currency and the importance of diversification. So, is the dollar on the brink of a fall? Only time will tell. But one thing is for certain, if such a fall does occur, the impact will be felt far beyond the US borders. It would ripple across the globe, affecting economies, markets and people everywhere. That's the cliff the dollar could be teetering on. A cliff that could lead to the collapse of stocks, bonds, dollars and real estate. Our system is more fragile than you might think, and that fragility could lead to the Great Reset, a system so interconnected that a single shift can set off a chain reaction leading to a complete reset. It's like a house of cards. One card moves and the entire structure comes tumbling down. So where does gold and silver fit into all of this? Well, they act as a hedge against this uncertainty. They're the insurance policy that doesn't rely on the dollar or any other currency. They're tangible, they're limited in supply, and they've been a store of value for thousands of years. And that's why you need precious metals, not to get rich, but to protect yourself from a system on the brink of change. They provide a safety net, a buffer against the unpredictable winds of economic change. This is why you need precious metals, not to get rich, but to protect yourself from a system on the brink of change. A new player has entered the game, the digital yuan. But what does this mean for the future of gold and silver? The digital yuan is China's version of a cryptocurrency, but it's not just another Bitcoin. It's a digital version of China's national currency, controlled by the central bank, giving the Chinese government an unprecedented level of control over its economy. But it's more than that. Some see the digital yuan as a potential beta test for a new global financial system, one that could challenge the dominance of the US dollar. If the digital yuan becomes widely accepted, it could have serious implications for the global economy. For one, it could undermine the dollar's position as the world's reserve currency. If countries start trading in digital yuan instead of dollars, the value of the dollar could plummet, leading to economic instability. But where does gold and silver fit into this picture? These precious metals have been a store of value for thousands of years. When currencies fluctuate and economies wobble, gold and silver remain steadfast. They are immune to the whims of central banks and government policies. Even as we move into a digital future, the physical reality of gold and silver cannot be ignored. As tangible assets, they cannot be hacked or erased. They are finite resources that hold intrinsic value. As such, they offer a level of security that digital currencies can't match. So as we stand on the brink of this potential shift in global economics, precipitated by the emergence of the digital yuan, the importance of gold and silver becomes even more pronounced. They offer a hedge against the uncertainty of this new digital frontier, a safe haven in a world of changing economic tides. The future is uncertain, but one thing is clear: gold and silver are more important than ever. No matter how the digital yuan impacts the global financial system, gold and silver will continue to play a crucial role. They are not relics of the past, but keys to the future.